Hi, my name's Phil Ringuet, Director of Vincents Lending Solutions, and today I'm lucky enough to have with me Leigh Warner, National Head of Research at Jones Lang LaSalle. How are you going, Leigh?
Great, thanks for inviting me.
Lee's kindly offered up his time to answer a few quick questions about the Brisbane and greater property market. So if you don't mind, Leigh, I'll just jump straight into it. So Leigh, in your view, where do you actually think the housing and the apartment market's currently sitting within Brisbane?
In Brisbane, I think we're pretty much at the bottom for both housing and apartments. Probably housing a little bit further along, but for both, we're seeing us work through some of the oversupply issues and demands increasing with increased population growth. And we've had a few positives for sentiment, so I think we're around the bottom.
Fantastic. It's a really good segue, actually, you mentioning the oversupply in the property market. We often get asked that question. Where do you think that's actually at? And is it starting to dry up?
Yeah, look, apartment market supply, there's been a lot said about oversupply in that market, but really the supply peaked in 2016. So that's quite some time ago. We've been working through it. That is now accelerating because the supply levels have dropped to very low levels of new supply completing now.
Mm-hmm.
And our demand, as I said before, has picked up because our population growth has picked up. So we are working through it. Rental vacancy is improving,
Mm-hmm.
and which is a good sign that we're eating up that surplus vacancy, and things are improving.
Fantastic. That does actually sound like some good news finally. In terms of both rental yields and capital growth, how do you see that for the Greater Brisbane market as well?
Look, I think capital growth will come back to the market, but I think prices won't do much in the very short term. It'll be less than inflation and less than rental growth. So that means that rental yields will rise slightly.
Sure.
In the short term. But I think things will start to gain momentum over the next 18 months to 2 years, and we'll start to see capital growth accelerate a little bit, but I don't expect a strong bounce in prices just yet.
Mm-hmm. So still a bit of work to go.
Yep,
Yeah.
absolutely.
For those who know the Brisbane market, we're often referred to as a big country town. But for those who really know that we're made up of many different sectors or aspects as well. So in your view, where do you see some of the opportunities within the Brisbane market for 2019 and beyond?
Yeah, I think there's definitely an opportunity, I feel, in the inner city and in detached housing when you look at the pricing relative particularly to Sydney, but also Melbourne. Our prices are cheap.
Mm-hmm.
We are going through a wave of migration again and people moving up, and they're viewing property like that as offshore investors are. Yes, there's less offshore investors in the market now, but they do view us as very affordable, and I think particularly that inner city stock is very attractive to them, and I think it will be bid up over the next couple of years and will do quite well.
Okay, excellent. Now, there's a great amount of financial stimulus or discussion of, in particular, around monetary policy. So what impact, if any, do you think that likely rate reductions will have on the property market as well?
Yeah, it's not cut and dried. I mean, lower interest rates obviously benefits people because you're paying less on your mortgage, so it does lift sentiment to a degree, but by the same token, the Reserve Bank doesn't cut rates for no reason. It cuts rates to stimulate the economy, and it's cutting for good reason because employment growth is stalling and we need a little bit more impetus back into the economy. So there is some headwinds there in terms of momentum in that labour market, which we need to address. So it is a double-edged sword, but I think in general for the average buyer, particularly those looking to get into the market at the bottom level, it's a positive, the lower interest rates. So
excellent. That's what we like to hear. Well, Leigh, thank you again for your time. We really appreciate your feedback and answering those questions so well. Thank you all for tuning in.
My pleasure.